There we go. Well, yeah, as Matt has kindly done, I'm David Daniel. I'm the CEO of Daniel, a fintech startup here in London, and we're building the technology for new infrastructure, or plumbing, if you like, for cross-border payments and banking. I'm also an elder at Every Nation, London. That's our church here, soon to be senior pastors from next year, my wife and I. So that's very exciting. And in our church, we say we exist to do two things: make disciples and make a difference. And really, you know, this Daniel and the work we're doing in this space, this is our mission field. And I'd love to tell you a bit more about that this morning. And I'm hoping that, yeah, just sharing this with you, you'll be encouraged to see where your mission field is, to see perhaps where God is calling you in the future, and you know, some of our story and how this has come together really shows the providential hand of God in that. And of course, yeah, just to give you visibility of what we're doing with a kingdom vision, to see others in the marketplace doing that, I hope will inspire some of you to do likewise. And you know, we really believe as Christians that, you know, we're called to take the kingdom into all spheres of society. And you know, there's been a sort of dichotomy in my life, in my calling, and feeling partly called to marketplace and partly called to ministry. But really, I think, you know, there's a calling to both, and we need both. There's no sacred secular divide. And so, yeah, let me start with a little story, which will hopefully inspire you and also raise your estimation of me. A little caveat, if you like. So I'm from South Africa, as you may be able to tell originally. So moved here 8 years ago, and really sensed, even as a teenager, a calling to the marketplace, particularly in the world of banking and finance. And I had this very vague dream that I sensed God had put in my heart to reform the way money moves around the world. But like Joseph's dream, very low on detail, but also feeling called to London from a young age, that this is where I believed God was calling me to. And really, I guess when he spoke to me when I was 17 on this, was really laying it on my heart. You know, I was thinking of London as kind of like Babylon. You know, it's like a land of mammon, you know, the system of want and money in this world. And so, yeah, there was this kind of sense that I was called to the belly of the beast, if you like. And anyway, I've been over here working in other professional capacities in finance, but really in 2020 started to feel this vision, this dream burning in my heart again. Really an itch to venture out and start something. Maybe some of you are in a similar position. And so I started praying about it. And Sunday, the 26th of April, 2020, bad timing if you cast your mind back to where we were as a nation at that time. I was fasting and praying, and really felt God saying, and I was saying, Lord, I'm ready to sort of launch out, go and start this thing. And felt God say, annoyingly, just wait, I'll bring the people to you. So never the answer you want when you're itching to get going with something. The next day, I kid you not, the next day I get a call out of the blue from some old friends in South Africa who said to me, listen, there's these guys you really got to meet. There's a guy, Martin. You guys share the same vision. We remember what you shared with us before you left, this vision for reforming the way money moves around the world. And there's a guy in the States, Martin, you guys have the same dream. You're talking about doing the same thing. He set up a company in London, and he's looking for a CEO to come alongside him and get this going. So we were introduced same day, Martin and I, and lo and behold, Martin had already incorporated the company with the name Daniel. So there you go. That's my disclaimer that I didn't name it after myself. That is certainly God's sense of humor, and also I'm sure designed to humble me. So yeah, I mean, really the inspiration behind the name in Martin's mind was the biblical Daniel. Just like me, that there was a real sense that, you know, we are called to take a stand in a world that doesn't share our values, where we may feel like exiles, where we are exiles. That our responsibility was to steward what God had given us, to lead prophetically, to lead with conviction, to stand with conviction, and that really God would elevate us to positions of influence, even in the midst of Babylon. And specifically in Daniel's case, he was made governor, wasn't he? So, you know, there was real stewardship over resources in the land. And that I think speaks to what we envision our role being in the financial space and what we're trying to accomplish. So that was 2020. The last 2 years we've been getting going. We are a startup. It's just been amazing to see the people God has added to our team who, many of whom are not Christian. We are not a Christian organization. We have kingdom principles, kingdom values. We're a kingdom leadership team. And behind the scenes have a spiritual advisory board, which keep us accountable to the way we run our business. But the kingdom of God is much broader than simply the church, isn't it? And so, our vision is that really this would be a lot bigger than just a sort of church extension, if you like. So let's get a little bit into exactly what it is that we are doing. And I hope in this session to do some jargon busting for you and help you understand some of the issues in this space. The problem we see today is cross-border payments are broken. If you've ever made an international payment, like I had to a few times for student loans and people's weddings, etc., from the UK to South Africa, you'll know that these things are expensive and slow, and particularly into the developing world. And the reason, so if you look at the marketplace, take a subset of cross-border payments, right, which is remittance payments. The World Bank tell us that it's about a $700 billion volume of payments made per annum pre-COVID, and we're back up to and even past that level now in 2021, which just went past. Now, the average fee on a low $200 remittance payment, the average fee globally is about 7%, and it takes typically more times than not 2 to 5 days to settle. The UN tell us that 1 in 9 people, so nearly 1 billion people around the world, depend on remittance payments for at least 60% of their household income. So for them, this is completely and fundamentally an existential matter of life and death, even in some cases. And you look at cross-border payments as a global sort of market. I think every other kind of target market is a subset of global cross-border payments. We're talking about $130 trillion per annum. And we know that even for businesses making larger payments in the UK, the cost is still around 2.5%. Now, the problem is particularly pronounced in the developing world. So if you're making a payment from the UK to, let's say, a country in Africa or in Asia, these costs are more expensive. In fact, the remittances into these markets made by migrant workers, perhaps nurses working in the NHS, sending money back home to family and friends, perhaps support payments to missionaries out in the field somewhere. The vast majority of remittance payments are going into the developing world. And in these markets, the cost is 9% on average. It takes 2 to 5 days to settle typically. And so you think about somebody living on the breadline of $2 a day, 9%, that's 9 days of subsistence that they depend on for their day-to-day living. And so really it is the poorest who are paying the price for the inefficiency that exists in the system today. And when we got into this, Martin and I and Daniel, one of the key drivers for us in terms of why we care is our kingdom values. That we should remember the poor, that we should seek human flourishing for all people. And we looked at this and just thought, this is not right. And so we have an impact mandate and an impact vision alongside, of course, significant returns and all of that. But, it's not mutually exclusive, that we want to do well and do good at the same time. Now, the reason for this inefficiency, quite simply, comes down to the plumbing that exists today. You may have heard of it. It's called SWIFT. It's been topical in the news lately. It's used for sanctions against Russia. But ultimately, SWIFT is the current centralized network that exists today. It was built in the 1970s. It's owned by 11,000 member banks who are part of that network. And the way it works is to move money around the world, usually from the sender to the recipient, that payment is getting routed through a number of intermediary banks. Each of them add a layer of time and fees to that transaction. And the reason is because a bank, let's say in the UK, doesn't necessarily have a direct banking relationship with a bank in, say, Nigeria. And so in sending that payment along, it has to go back to back through a number of correspondent intermediary banks. And that's where the time and the fees all add up. And it's this kind of centralized network. So if you look at, just a classic example here, this is a real world example, sending £200 from the UK to South Africa. If you were using a traditional bank-to-bank payment, just vanilla SWIFT payment, you'd be looking at close to 14% on that very low value payment. And I kind of liken this example to the Discman, if you're old enough to remember one of those. And it was great at a time, it worked, it did its job, but it really is stuck in a past era. If you had one today, it would be a vintage item. Now, in more recent years, we've seen the rise in the last sort of 7-8 years of these kind of challenger institutions. Wise is a good example, Revolut, there are others. And fundamentally, they've not built any new technology that changes the way cross-border payments work. What they've done is find very good workarounds to the limitations of SWIFT. So, for example, Wise, they keep pots of liquidity in different countries, and instead of sending money actually cross-border from A to B, they take that sender's money and they send it to a local recipient awaiting a payment on the same end. And they do the same at the other side. So they settle it with 2 local payments. And that's great in corridors where there's parity, say, between the US and the UK, and money is moving in both directions. But the model is it has limitations when there's a developing country on one end, because most of the payments are inbound. So balancing those pots of liquidity is not as easy. And so, I liken this to the iPod, which was a fantastic, it was a massive leap forward in user experience, but ultimately we were still tethered to our laptops, if you remember those days, and iTunes on our laptops. And it's because we didn't have mobile broadband or Wi-Fi that had really set us free from the cables and enabled these things to go truly wireless. And so we're looking at this and going, well, what is the technology that gives us the big leap forward, that frees us from the cables, and significantly reduces the time and cost for cross-border payments? A drum roll, please. So we look at this new technology category that has emerged, which I guess grouped together is loosely called DeFi, short for decentralized finance. You may have heard of some of the terms that fall under that umbrella in recent years, and I hope to kind of open the lid on some of that for you in our short time together today. So ultimately, DeFi consists of a number of technologies as subsets, things like blockchain, stablecoin, etc. But really, the bottom line is that it is a democratized way of setting up financial infrastructure, right? Whereas SWIFT was this centralized network, DeFi is decentralized and sort of democratized. Whereas SWIFT uses a single sort of database, DeFi is kind of decentralizing that, again, distributing it. It's digital. It doesn't require intermediaries in the same way that SWIFT did. It's not owned by the banks. It's kind of open source. Again, this kind of theme of democratization. And of course, SWIFT can be used as a political tool. That's great when it's the bad actors. In our view, it can become a little bit scary. And I don't mean to get too eschatological here, but there is an element of the concern of the rights of private citizens and freedoms and all of these things. And we're starting to see how that becomes relevant as governments get more and more involved in architecting cross-border payments of the future. If you can program money, you can do a lot with it in terms of data, in terms of deducting taxes at source, all kinds of things become in scope. The bottom line is that DeFi makes it possible to move money at the speed of the internet and at significantly lower costs. And I hope to unpack that for you a little bit. So there are some terms that you'll come across in DeFi, things like blockchain, exchanges, cryptocurrency, stable coins being a form of that. And I hope to just jargon bust some of that for you, perhaps with a simple example that kind of builds in some layers to help you see the landscape we're in. So you may have this chap, Adam, in country A, who perhaps wants to buy crypto. Now, there are many forms of cryptocurrency. I'm sure you've heard of some of them, like Bitcoin, Ethereum, etc. Most of these are volatile, as I hope you know, speculative forms of digital money, i.e. value that can be transferred, and they're not underwritten by any authority. There's no reserve that sits behind those, and hence why the value fluctuates and is such a risky class of assets. It is driven by the demand for it, and that kind of is what upholds the value. And of course, that can deflate very quickly, as we've seen in more recent months. So the question is, are there any forms of crypto digital currency which more closely represent fiat money, real pounds or dollars? And the answer is yes. These are called stable coins, and specifically collateralized stable coins, which means that for every one USD or one GBP, you might issue a single digital stable coin, a tokenized digital currency version of that, which is pegged one for one to a real underlying fiat coin. So if you issue one stable coin, you've got to hold one real fiat currency in reserve. If you redeem that, currency, you've got to burn that stable coin. So Adam, let's say, goes to his local exchange, right? This is an online place where you buy and sell crypto, and there are 500 of them. There are many various exchanges. There are very many stable coins in issue. Some of them are safer than others. Some of them are audited, some are not, and some are regulated, some are not. But he goes to his exchange. He purchases his stable coins. He can exchange his GBP or his USD for one of these coins. And Adam will have a wallet. On that exchange, he will have a wallet. That wallet has a unique address, a very long alphanumeric address, and that will allow him to have an identifier for his wallet. Now, interestingly, so does Eve in country B. She's got a wallet on her exchange, also has an address. And so the magic of DeFi is that Adam can send digital currency from his wallet address directly to Eve's wallet address using what we call a blockchain. Now, a blockchain is really a ledger. It's a network, or it can be used for messaging and also for recording settlements. It has a number of applications. But what a blockchain is you are recording transactions and data in sequential blocks. These are sequentially numbered. And every time a transaction is completed, is validated, it adds a block to the chain. And that block has a sequential special number. And it is immutable because connected to that blockchain network, there are a number of computers, which we call nodes. And every time a transaction is completed, that transaction is pinged out, and that block is added to the blockchain that is pinged out to all the nodes on the network. So everybody has a record of the sequential transaction history in the chain. And that makes it immutable. If somebody wanted to hack that network, you'd have to hack all of the nodes to change the historical records simultaneously. And of course, that is hugely uneconomical, if not impossible, because all the nodes would have a correct version history of events, even if one node was changed. And so as a form of a ledger and recording the transaction and the movement of the custody of that stable coin, let's say from Adam to Eve via a blockchain, she has now received digital currency at the speed of the internet. Now, what's interesting, you notice here that there are no intermediaries necessarily involved, right? There's no bank that went through the process here, and it entirely allows someone like Adam and Eve to connect directly for making a transfer. Now, the problem exists, of course, is that we have regulation around payments, right? And that exists to protect the public. We honor and want regulation for sure to avoid money laundering, to protect people from scams. And so really, we looked at this landscape and we thought, well, this technology is allowing something that fundamentally is an improvement technologically on what exists today if you want to move money around the world. So how can we harness that to be able to move money at scale as efficiently and within a regulated wrapper? You might think of it like this. We basically took exactly the same transaction that you've just seen, and we thought, what if we were able to wrap that, as you can kind of see the perimeter around there, and provide that as a service between a bank or a fintech who makes payments in country A and another in country B. We can play that role of being the conduit for moving that payment from country A to country B using the efficiency of the exchange, stablecoin, and blockchain payment mechanism. And that's exactly what we're looking to do. Our solution really is a first in the UK as far as we're aware, which is provides a regulated, FCA regulated service, soon to be, I should say. We're very much in process with the regulator, and that's going very well, but we will be regulated. We'll be connected into multiple different payments blockchains, multiple different exchanges, because there's not just one, right? That's part of the proliferation of DeFi. It's not just one network like Swift anymore. You've got a whole bunch of sort of public open blockchains that can be used for payments. So institutions can't do this for themselves. You go back to the last slide, you think, well, why can't Barclays do this? And why can't Wise just do this themselves? It's because there's a plethora of blockchains. There's so many combinations of how this can be done. So what we're looking to do is basically be the on-ramp that connects into multiple of these networks and routes those payments using different stablecoins and currency pairs. But we bring that all to institutions like a bank or a fintech through a single connection, right? They don't need to connect into 10 different blockchains. They come to Daniel, they connect to us, and we will steward how that money moves from A to B. And the bottom line is, as a proposition, we are now able to make cross-border payments significantly cheaper and faster. We want to kind of bring this technology at scale to the financial institutions that own the end user today already, like our banks, like our fintechs, the apps that we use. And we know that having done a few tests, we can drive the cost of a cross-border payment down significantly to a maximum of 1.5%. And I go back to, our raison d'etre. Why did we get into this in the first place? A kingdom impact vision. We look at what's out there today and the market that exists, and we believe that we can help save 110 billion per annum in fees on cross-border payments, democratizing that, bringing it down for the end user. McKinsey tell us that in 2020, 40% of the revenue of large banks came from fees on cross-border payments. And we want to solve that. We think that our customers will be banks and fintechs. We can drive the base cost of those payments down so significantly that they will still nonetheless be able to make their margins on those payments. And ultimately, we can put money back in the pockets of the vulnerable who need it the most. 38 billion in potential annual fee savings on consumer remittances, those low-value payments. And because we can bring that down to within a day, we can save up to 8 days for them in subsistence on every payment. Now, I think there's one last thing that's interesting. We're talking about cross-border payments today. You're going to hear a bit about Web3, and this is all kind of part of that same story during the rest of this conference. But really, the borders of the future are not just natural borders between countries, but are also going to be borders between digital countries, if you like, metaverses, as well as the borders between the real world and the metaverse. And ultimately, a lot of that is built on blockchain and DeFi and the decentralized technology that all of this enables. And we see our mission field being also providing a network which acts as the sort of missing middle layer between the traditional regulated infrastructure that we have for banking and payments today, and also where the future of money and value is going, because it won't just be money that people are trading in the years to come, and it's already happening now. People will be exchanging other forms of value, be that real estate in the metaverse or NFTs. We're looking to extract value from the metaverse into the real world in currency that translates. And so this is where Daniel is playing a role, building a network which has sort of ubiquitous application across all of that.